Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education, and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Assalamu alaikum wa rahmatullahi wa barakatuh. I hope you guys are well. I hope everyone that celebrate Eid had a blessed Eid. And sorry for the long awaited video. I've been very busy. I was out of London celebrating Eid with my family, and let's get started with this year. But let's get started with all these pairs, obviously the casual pairs and normal pairs that we talk about. But first of all, any views, opinions or suggestions that are expressed in this video do not constitute to trading or financial advice. So let's get started here on pound yen. Here my annotations. We have obviously still following the structures from the previous video. Market's moving up nicely, as we've discussed, and obviously it did reach the sort of upper boundary of the sort of parallel channel that we have in play. We have a simple WXY corrected structure into a wave B, and then we should expect more downside in the long term. However, in terms of the short term, we have an AB, and we're currently in this wave C. This moves in 5 waves, and then the wave B comes in 3 waves, and now this is also moving in 5 waves. So we have an ABC as a zigzag to finish our wave Y. And we have a wave 1 here, wave 2, a 5 waves impulsive move here into a wave 3, and where we are currently is in this sort of wave 4 corrective structure right here. This is moving sideways. This is a corrective structure. We don't want to necessarily be trading anything like that. Just be a bit careful. Let the market play this out. Let it give you a clear sort of a concise answer of where it wants to go. By the looks of it, we do have nice sort of pin bars and what do you call it, rejection candles, wick rejection candles, to say that we might go up a little bit more. However, that doesn't necessarily mean that we're gonna just go up straight away. We could just eventually just come up for one more, then come back down, and then go up that, and then that will be the last sort of move to the downside before we then get a huge impulsive move coming back in to give us our fifth leg and eventually complete this WXY, and in terms of the high structure, this B wave. All in all, I think for this pair, just sit on your hands, don't necessarily trade it. It's moving sideways, and let the market just clear up a bit. So let's go to pound dollar. So here's my annotations, and pound dollar is obviously moving the same. In terms of the higher time frame, in terms of the day time frame, we are bullish. Everything is moving to the upside. However, the short time frames, like 1 hour and below, are sort of moving in a sideways movement. And I genuinely believe that this is a complex correction as a wave 4. We are in a wave 1, 2, 3, and we're currently getting this wave 4 right here. And essentially, what that's basically doing is giving us a complex correction, where we might see a W, then an A, then an A, B, C, B, and then a C, a W, X, and then we'll get one more down into a Y, and then that'll complete our wave 4. Then we continue going up to the upside. So I wouldn't be trading this pair as of yet. I mean, it is moving sideways. It is in a range. Let that range clear up. Let's get a nice breakout, and once that breakout is confirmed, we can then eventually look to buy it one more time to the upside, and eventually give us our fifth and final leg, and that will complete our bigger structure of a 1, 2, 3, 4, 5 in a higher degree. Once this 5 wave or this 5th wave completes, remember the market could change its cycle for a short period of time or a long period of time. It completely reverse and continue going back down. So this is the 5th wave. I don't really, you can trade the 5th wave in terms of the Elliot Wave principle, but it's a bit it is very risky. Alright, it's the last push. Remember, it's the last push, but In terms of short term, for this pair, we are moving sideways. In terms of the long term, we're going to get one more push to the upside, and obviously, then it might change its cycle, and then we get a deeper sort of correction coming back down. So let's go on to the next pair. Here's the gold chart. So gold's been moving nicely, just as I said as well. A wave one here, wave two, 1, 2, 3, 4, and then a 5, giving us our wave three. And where we are currently is in this sort of wave four corrective structure right here. As you can see, it's not moving as we want. It's moving in sideways, and we just have to wait for this to also clear up as well. I wouldn't necessarily just buy it, that's very, very risky. You want to wait for the impulsive moves to start, wait for that correction, and then obviously look to buy it. Now, obviously, this is going to be the fifth wave, and that will complete our wave one once we get this impulsive move to the upside. And once this does complete, we're going to expect a deeper correction, giving us our wave two in the long term. And then before we continue going up, before we continue to even continue push to the upside, we'll get this correction, and then from there we should continue going up, giving us our third, fourth, and fifth to complete our wave three in a high degree. Then we'll get a long correction as a wave four, then a wave five, and then that'll complete a huge impulsive leg to the upside. So in terms of the short term, we are, I would say, going up for one more push and then correcting. So we will probably be going down once this impulsive move completes. But in terms of the long-term degree, we are extremely bullish. I think we are going to continue going up, especially how fundamental drivers are driving this pair and all the other pairs as well. So I hope you guys do like my analysis. Please do like, comment, share, and subscribe. I do have a Patreon for those people who are interested in mentorship. The link will be in the description down below. And inshallah, I'll see you guys until the next one. Wassalamu alaikum wa rahmatullahi wa barakatuh.